Welcome to the daily update, where I'll go over the action in the market for Friday, August 16th, and we'll see how things look for Monday, August 19th. We did end up seeing another up day. Now, it didn't have the real thrust that we saw on Thursday, but the market was looking a little bit tired. It was also options expiration, which is strange because we were below average with volume. But we continued to be positive in the short, intermediate, and long term, looking a little toppy, maybe a little exhausted in the short term. We're seeing signs of a continuation of an improvement in the intermediate term. And we never did switch from being positive in the long term, even when we were seeing the decline. So we just kind of take that and see where we go from here. There was some economic reports that came out that were actually weaker than expected. There's also geopolitical things that we want to keep an eye on. Please know that I do have a thing called the SPXInvesting Program. In fact, there's going to be at least one video over the weekend that I don't put on YouTube or Rumble that will be on the website. I'll be going into a little more depth of what are we looking at as far as the economy. And so if you're interested in that and other supplemental videos, there's additional videos that I also put on there about different trade ideas that you might consider, both short, intermediate, and long term. And for right now, everything is free. It's wide open. You just have to use your email address to become part of that. I will be locking that down. Now, I was originally going to lock it down in August, but I have an upcoming trip that I was not really sure if that was going to happen or not happen. Right now, it looks like it might happen. It has to do with going into Israel. So, yeah, if things explode there, then the trip is off. If things stay calm, then the trip is still on. And that will be from about the middle of September until the first part of October. So anyway, and I'll be making more announcements about that. And in the meantime, though, everything on the website is still wide open and free for you to observe. But at some point, I will be locking that down. There is a link in the description below this video that'll not only take you to the website, you can also go to a list of program videos that talk about what I go through in the program. There's a lot of things that are not on the website yet that I will be rolling out after the website actually gets locked down. And this video is just one of many that I put out each week. This is the daily video, and this is where I do the most analysis and commentary, and this is where the most of the focus is. Now that it's the weekend, I'll be doing these other videos that go around the outside. I know they're popular for a lot of folks that don't have time to watch all the videos that I do post, but all of these other videos are meant to tie in to the daily video. Okay, so let's go back and talk about what happened, and then we'll go through some charts. We did have a lower open, and there really wasn't a reason behind this. The futures were positive when I started to record the video for Friday, and then by the time I got done, we were drifting lower, 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 and it was just drifting. It wasn't really reacting to anything. Europe wasn't falling apart. Things weren't going crazy in Asia. There was nothing geopolitical that was happening, but we just drifted lower with the futures. And so that gave us a lower open right at the daily pivot at 55.30. And then we were able to climb up off of that. We got above the unchanged level, but then we came back down to the daily pivot. And that's the decision point at there. Are we going to break below it and really see some weakness? Well, the support held at that level. And so we climbed back above the unchanged level. We got up to R1 at 55.59. And that was pretty much where we topped out. We didn't see a lot of selling into strength. If anything, we're seeing some buying in weakness right now. This whole buy the dip thing that I don't implement nor condone, but a lot of people do, because what is a dip? You know, a week ago, Monday, 2 weeks ago, almost now. I mean, if you tried buying the dip then, you were seeing some pretty hefty losses. I like to get into positions when it's going in the direction that I want it to go in. So if I want things to go up, I only get into up positions if we're actually going up. But that's how I differ from other folks. And then we chopped along R1, and then we closed slightly below R1 to finish out the week. We were up 0.2%, and it was strange. We were below average with volume, even though it was options expiration. We usually see a real pickup in volume on these days, but we didn't see that on Friday. We are positive in the short, intermediate, and long term now, a little bit overextended, which could also suggest good momentum in the short term. Interest rates continue to come down as we're switching back. After the employment situation report came out, it's like, oh my gosh, we're going into a recession. We're crashing with the market. Japan's going crazy. The whole globe is going crazy. We need emergency rate cuts. Well, that's kind of subsided now. That became the pop news for a few days. And we've been bouncing up out of that as the market is starting to adopt this idea of what it had been using in 2024, that, all right, the Fed's going to lower interest rates, but it's not because the economy is falling apart. It's just to help things grow a little bit more. And so we're switching back over into that more positive scenario right now. But this can change back and look negative at any time. It didn't take very long to switch over to the negative scenario, and it has taken a few days to switch back to the positive scenario. But these things do change from time to time. That's why we pay attention on a daily basis to see what's really going on in the bigger context of things. And then all the different geopolitical things that are going on as well. It was options expiration, and the VIX continues to drop. It was above 60. And like I said before, people that didn't even know what the VIX was, they suddenly were talking about it and posting pictures about it. Well, that's when it got up over 60. Now it's dropping down under 15. Here's our short-term list of indicators, and we're getting a little extreme with some of these, but as I always say too, you can see this as good momentum. We have the rate of change going back 5 periods, the Stoke RSI, Williams percent R, the CCI 14. The 20 is just barely under that line where we look at it being extreme positive. The stochastics, the force index, and then the boom indicator. We're getting a little far away from that 20-period moving average. In the intermediate term, we just have the CMB composite. So we're not looking extreme with anything, at least yet. And even in the long term, the rate of change going back 200 periods, that's looking a little extreme on a shorter term basis. And we're getting kind of far above an extreme reading now with the 200 period simple moving average. But again, you can say, oh my gosh, we're going to pull back. We're going to have a decline, which of course could happen. But you could also look at this and go, wow, even the long-term momentum is still pretty solid. Okay, so this looks to be changing back to more of this positive type scenario where the economic growth concerns seem to be going away right now. And there's 100% chance that the Fed's going to cut rates in September. It's just by how much. Now, with the economic reports that came out on Thursday and Friday, it had been split between a 50% cut and a 25% basis point, or 0.25, a quarter of a percent. Okay, let me change that around. 0.5% down to a quarter of a percent cut. That got chopped in half. So now most people are focusing on a 25 basis point decline, but I will go over that in the weekly video. Then the dollar was down and interest rates were also down. We're still coming back down now with the 10-year yield at 3.89%. In Thursday's session, we were getting kind of close to that 4% level again, but we never ended up closing above that. We were at 3.93%, while we declined down to 3.89% with the 10-year yield on Friday. We're still inverted with the yield curves. Now they're getting close, especially the 10 to the 2. And this is probably what most people focus on. But a lot of people also focus on the 10 to the 3 month. The 10 to the 2 has been inverted the longest, well over 2 years now, where we're just about at 2 years, I believe. I think it was August of 2022 when it went inverted. That still has a ways to go. And we're going to be watching this to see what happens after that. Okay, sentiment is still negative, but improving. And so when it's going up, we tend to go with that. It's just when it's extreme positive or negative. That's when we look at using this as a contrarian indicator, where we're at 35 now, where we ticked up from 33. And our trend is looking positive, but not enough yet to turn the ADX back up above its moving average. And I'll show you charts of all of this here. But we're now defaulting to positive where we had been defaulting to negative since the green line has crossed above the red line. And with the up day, that's usually if we have an up day or down day, that's what I call the bias. That's positive. And then the last number of days taken together, kind of in a loose definition, 2, 3, 4, 5, 6 days together, that's what I consider to be momentum. And that is also positive. Okay, economic reports. We did get building permits. They came in weaker than expected, and these are considered to be forward-looking. these are some of the most forward-looking reports that we actually do get. And so this might suggest a little bit of weakness. They thought 1.44 million building permits were going to come out. It turns out it was 1.396, so weaker than expected, and also down from the 1.45 million that we saw last time. And housing starts, another leading indicator, because housing starts, building permits, these are things that you have to get before you even actually get to the point of having a house. It came in at 1.238 million, down from the 1.35 that they had expected, and also down from the 1.329 million that we saw. And consumer sentiment. Folks are a little uneasy right now about the whole presidential race and what's going on with that. So they're not feeling really optimistic. Now, looking out into the future, they're feeling better. But as of right now, they're a little bit pessimistic. We came in at 67.8, which was actually above the 66.7 they thought would come out, and also up from the 66.4 that we saw last time. So here is the chart of a 3-month average of housing starts and building permits where they are declining. And this could suggest some economic weakness. And this is looking at the seasonally adjusted annual rate here, where it is starting to decline overall. This is consumer sentiment, where it ticked up a little bit, but we're not really screaming to the upside, where we had been showing a lot more improvement with this blue line. Well, it ticked up, but not by very much here. And just to give it a little bit more context, I also put the 2-year yield on here as well. And this is when you break it out a little bit. The blue line is the total, and that's what we just saw in the previous chart. That's turning up. And how people are feeling in the future, that's the yellow line. They're looking okay. It's like, okay, we'll have a positive outlook on things. But when you look at the purple line, that's how people are feeling right now. This is where we're seeing things coming down. And based on what I read through, it has to do a lot with what's going on with the election. All right, and then I copied this. This is a long-term chart, so I went with the whole part of it here. Usually I don't do the date and what this explains. But this is a 39-week rate of change. Now, who sat around and came up with this, I don't know. But when we typically get to a pretty high reading, which is kind of where we're at right now, this is a warning sign, longer term. But first, we'll see it in the short, intermediate, and long term on our daily charts. Then if we do start to see some weakness, then it will go over into our weekly charts, which is what this is here. And looking at the value of Wall Street relative to the value of Main Street, well, yeah, we're getting back here really close to record highs again. And it just shows that a lot of the wealth is maintained on Wall Street. And then the buybacks, they're coming out of their lockout time here when they can't buy or sell as they're reporting earnings. There's a period before and a period after. But still, when you look at this, this could add some fuel to the market. Based on Goldman Sachs, they're forecasting that this is going to go up. Now, this is just an estimate for 2024 and 2025, but the fact that this is going up tends to be positive for the market. And then looking at, and now CPI came out earlier in the week, but in the first quarter, rates actually went up a little bit. Now, in the second quarter, when CPI is coming down, this is just showing how interest rates are actually going down slightly. Actually, they're unchanged right now. You can just barely see that. And then since we had retail sales coming out, this is something just to be aware of. A lot of times when we go and start to flatten out, that leads us into a recession, flat recession. And then we decline a lot of times during the recession. Of course, everything during COVID went crazy anyway. We've been pretty flat here, and that's been a concern that we've been watching. But with retail sales coming out strong on Monday or on Friday, this really gave some confidence that, okay, about 60% of the U.S. economy is retail sales. This is going up. The unemployment claims were weaker than expected, so people still have jobs. They can still go out and buy things. All right, let's send the market higher. And that's what happened on Thursday and switched us back over to full-blown positive. And we were able to maintain that in Friday's session. And then looking at the mentions of AIs on their earnings calls over time, it's still very, very high, but dropping down from where it was before. The Yardeni charts, that's what I'm going to base a lot of the video on, that I'm going to do the supplemental video over the weekend. So please go to the website to check that out. I found one interesting chart here from Sentiment Trader. This is the put call ratio. Whenever it's crossed above 0.75, and then we're above the 50-day moving average, that typically means things are good looking forward. Now, 1 month out, we tend to look better than we look 2 months out. Now, seasonally, we're running into September coming around here. Doesn't necessarily mean we're going to fall in September, but September is one of the weaker months of the year. And if we are going to see a decline, it would not necessarily be out of character for what often happens in September. Then when you go out 3 months, 6 months, and 12 months later, the returns are good and the percentages are also very good as well. All right, here's our chart. And I'm showing more of the intraday data than I usually do because I want to include the big downward move on August 5th. We came down here, we bounced up, came down, set some support right here. And we did have a big down day on Wednesday on the 7th, but for the most part, we've been able to climb our way back higher. And we did have a lower open on Friday, came down to the daily pivot. We tested that twice, so that built good support. We launched up off of that, but we stalled out right at about R1 and then closed slightly below R1. Intraday, looking here, this is the pre-market session where we were showing some weakness here as we were getting ready to open. And there really wasn't, I watch this chart all the time. I'm usually teaching English lessons, but I can constantly glance at this even while I'm teaching. And there was really no reason for this to be falling lower. I thought it might be because of options expiration that they might want to get prices back down close to the 5,500 level. Well, we never even got close to that. But then we saw a real bounce after we got into the session. All right, then looking at growth versus value intraday, both are showing an improvement here. We're bouncing up, but the red line is still above the blue line. We want the blue line to be above. That's just showing growth is outperforming value, and that helps the market go higher. We are seeing an improvement here. Here's August 5th, where we really started to shoot down, but we've been bouncing back up when we look at S&P growth to value on an intraday basis, but it was actually down compared to value in Friday's session. So end of day growth was up, but up less. That's why we saw the decline on the end of day chart. We were down with the mid cap growth and we were up, but up quite a bit less with small cap growth. So we are seeing a little bit of improvement here with small cap growth to value, but not all that much. We're seeing a little bit of an improvement here with mid cap growth to value and a little bit of an improvement here with S&P growth to value. We want all of these to continue to really go up. That helps the indexes to go higher. Now, this is still looking encouraging, even though we fell back just a little bit. When we look at this growth ETF versus value ETF, we are still coming up, but we're inside the middle part of the rainbow. We want to see this continue to go up to be more positive. Discretionary to staples, we're bouncing up here a little bit, but not really showing any convicted strength, at least at this time. But we're looking better here with the large cap growth ETF. We've been able to stay back above the 50-period moving average here. So we came almost down to the 200-day moving average, came back over the 100, and now we're above the 50. So the large caps are showing some real improvement as the market is switching back to this scenario that it had been following for most of 2024, that if the Fed cuts rates, it's not because the economy is falling apart. It's just to try to stimulate the economy. And looking at the large cap to small cap ratio, we ticked down just a little bit here, but we have been coming back up. And we're still keeping an eye on small caps to see if they gain some fire. They were up and they had a pretty good week, but they're still pretty much range bound. Looking at our trend, we are switching over positive. The green line is above the red line, but you see the ADX is still declining. It's going to take a few days for it to pick this up, but it'll go faster if the green line continues to really go up. The ADX will pick that up, turn and start to go up and eventually cross above the moving average. And we're seeing that also here. With the short term, the green line's above the red line, but the ADX itself is declining. But we're still in a trending environment when we're above 20. That's a static number that we use to define trending from non-trending. But we continue to drop off with volume, and that is another warning sign. When we were really coming down here in the earlier part of August, look at how volume was really picking up. Well, as we're bouncing back up, look at how volume has been dropping off. And that is a classic negative divergence. But we ultimately have to go with price. But we just want to see, okay, is there a lot of velocity behind this price? Because volume is really dropping off right now. Looking at sentiment with the Ulcer Index, we're still getting a fairly high reading here. But we're coming down with the VIX. We continue to drop, both on a closing basis and then on a bar chart basis down here. And when the VIX is going down, the VIX of the VIX also declines, both with the bar chart and the line chart. And that's not necessarily uncharacteristic of what we see. In the earlier part of August, we tend to see a real spike up in the VIX and then a pullback. Is that what's going to happen here, where we eventually start declining again, and then we see the VIX really go back into going up? Because that's what happens when stocks go down. Or are we going to see something different this time? And then looking at the momentum of the VIX, it is now turned to down as measured by the MACD. We're declining with the equity put call ratio on the daily chart, the 5-day chart, as well as the 10-day chart. That tends to be more positive. We're also declining with this fear gauge and the other fear gauge. So we're seeing a lot of confirmation here that fear in the market is really coming down. This is another type of sentiment gauge. It's the risk between risky and not as risky bonds. Where we really focus on is in this middle area here. And as long as this is going up, because this is inverted, that means that fear is going down. And to be more positive, we want to see this continue to go up. Seeing not much of a change here with the risk on versus risk off, where it really fell as we saw the decline, but it has been starting to bounce back up lately. And volatility risk premium, another measure that we use to look at sentiment, is very, very low right now. After it really spiked up first part of August, it's really been coming down lately. All right, the advanced decline line. Now, there's some positive things and negative things from this chart. We are breaking out to all-time highs here with the advanced decline line based on price. We are improving based on volume, but we haven't broken out to all-time highs. So there's a bit of a negative divergence that we're seeing here. But both of them together are still positive, though, because we're above the moving averages. Seeing a little bit of a drop-off in the new highs, but we're seeing many more new highs than new lows. So that's starting to turn our 5-day back up, but we're still declining with a 10-day. But this internal measure is still looking fairly healthy. Also looking good here, the advanced decline ratio, both the green line, no, I know my colors, the blue line and the red line continue to be above zero and advance. So breaking it out and including volume here, we're looking positive based on price and volume with the 19-day advanced decline ratio. And we're still declining here, but we did bounce back up because this is a slower type of indicator. It's 10 days, so it's going to take some time for the new highs, new lows to start to improve. Well, we saw a little bit of a bounce on Friday. We'll see if this can continue to go up. And the accumulation distribution here, we're back above the moving average. So that's positive. Now, down below is the boom indicator, and it's not a complete one-to-one relationship between where the accumulation distribution is in relation to the moving average, because it's already giving us an extreme positive reading. When you can just see by looking at this, well, I don't know, we could be above the midpoint, but we're not necessarily extreme right now. This is just as close as I can get with stockcharts.com. If I was still using the other software that I used to use, I could do an actual calculation to represent what we actually see here, but I don't use that software anymore. The chicken money flow, another smart money indicator that we look at, is improving and the red line is going up. So it hasn't turned positive yet, but it is looking more positive. And the Chaikin oscillator is positive, above zero, and continues to advance. So we look at the smart money indicators. All three of them are either positive or in the process of turning positive. So we take all of those together and form a positive opinion. And then we look at the vortex. The green line's above the red line. That is positive. We're going up and setting new highs here with the cumulative S&P 500 advanced decline line based on price. We're lagging a little bit here based on volume, even though it is improving. So it's looking better, but still we see that negative divergence. Also coming back up with the NYSE cumulative advanced decline line, but we're not back up to the moving average yet. But we're breaking out and setting highs with this other NYSE advanced decline line. And it's still another advanced decline line for the NYSE that we follow is also breaking out to new all-time highs. And we look at the common stock advanced decline line for the NYSE, not breaking out above this previous level yet. We're showing some improvement based on volume, but not breaking out yet either. But this is suggesting that the broader market is holding up. This also suggests that the broader market's holding up. The red line is the NYSE advanced decline line. Even though they're on different scales, when the red line is above the bar chart, that shows that the broader market is looking strong. And we're looking strong here with our advanced decline line studies, pretty much across the board with all the different indexes that we follow. Short term, we were able to get above and clear above the 50-day moving average. That was kind of the last holdout for right now. And we've been above this pivot point here. So we're showing some improvement based on this chart. But on the bottom, the last number of days, we're really dropping off with volume. We're not quite extreme with the 20-period exponential moving average of the S&P itself. We're just a little bit under this blue line, showing an improvement with the 50, and we're going up, but not very much here with the 200-period moving average. Coming down, but still looking rather extreme with the rate of change going back over the last 5 periods. We are looking extreme with the Stochk RSI, the Williams percent R, the CCI 14 is just barely starting to cross above 100, and the CCI 20 is just barely under 100, so it's not extreme yet. The condition of the 20-period moving average, really improving here. We're turning back up, prices above both lines, and we're starting to see where the green line is attempting to cross above the blue line. That means that there's more strength in the move. And then we're also looking better here with the exponential moving average crossing back above the simple moving average when we look at our 20-period moving average study. Still looking a little bit extreme. We're getting kind of far away from that 20-period moving average as measured by the boom indicator. We're above zero and advancing when we measure the distance from the 50, and also showing some improvement with the distance from the 200. In the short term, with the stochastics, we're looking extreme, starting to get extreme in the intermediate term, crossing above the middle part here, the midpoint, and looking positive this way. Now, for those of you that are new to the video, this is a further subdivision of the short-term time frame. So we have short term, which could be just a few days, intermediate short term, which is maybe a few more days, and then long short term, which could be even more days to possibly a week or two. That's how I break this out. The force index is still hitting this upper Keltner band right now, so it's extreme positive. We're not extreme here with our standard deviations chart. We're in the +2 channel, and that's usually a pretty strong place to be. When we get concerned is when we get up into the +3, but when we're really moving higher, we can stay up in that +3 channel for a long time. Intermediate term, the balance of power is above zero and going up. That's positive. We're still extreme positive with the CMB composite. That's really the only thing extreme right now. We're showing some improvement here with our 50-period moving average study. We're getting above both lines. The blue line and the red line are starting to turn back up. So we're above both the simple and exponential moving averages. So this is showing an improvement. It would be even more positive if the blue line was to come back above and cross above the red line, hopefully in the near future. Here's all of our moving averages. We're above all of them. The longer we stay above them, the more all of the moving averages will continue to go up. And we're kind of brown right now, which is more neutral here with the go, no-go system after being dark purple or deep purple. Yeah. And then we went a little smoke on the water, turning brown here. Little space trek-in as we're changing from negative over into positive. All right, then we're hitting the upper side, the highest high value here with the blue line. But the blue line has been declining. It's going to look more positive if we keep going up and the blue line starts to turn back up as well. TTM squeeze, still negative, but really improving. If we see another couple of days of positive action, this could actually switch over and look positive and turn blue. And we're really moving now with the standard deviation. And this doesn't measure direction. This is just saying that we're showing a lot of speed, either up or down these days. The ease of movement is right below zero. So it's still negative, but it could potentially turn positive very soon. The Erin indicator is still on vacation, going sideways. And the McClellan oscillator, we're above zero and going up. That's positive. So when that happens, the summation index based on price is going up and also based on volume. Yeah, we take into account these longer term negative divergences here. But right now, we're just saying that both are going in the same direction at the same time, where we weren't seeing that for quite a while. Before the decline, we were seeing price going up and volume going down. Now we're seeing them moving with each other. And the NYSE McClellan oscillator, a broad market measure here, above zero going up. So a little bit longer term, we're going up with the summation index based on price and volume. Swenlin trading oscillator, looking pretty solid here. Now, this is one of my in-between indicators. It's not a primary indicator, but it's not a secondary indicator. So that's why I color it yellow. It's kind of right in between. This can be a very good and very helpful indicator, but it can also lead us astray at times. But right now it's confirming each other and looking quite positive. We are turning up with momentum. The PMO is starting to cross back above its moving average. We're also crossing back up based on price and volume. So we're looking better here with the PMOs that are rising. The buy signals are going up, and we're going up with the PMOs above zero. We're positive with the Elder's Impulse system for the S&P. We're positive with the parabolic SAR. We're positive now with the slope oscillator. It continues to be above its moving average and going up. Now it won't be full-blown positive until it crosses above zero. The MACD, the same thing. It won't be full-blown positive unless we get above zero, but it is turning and going up above its moving average. So in the short and intermediate term, our oscillators are actually looking quite positive now. We're seeing the tricks start to turn up and the KST turn up, but they haven't quite crossed their moving averages yet. Those are longer term. The Copic curve is positive now. It's above its moving average. The Sean trend meter is up in this Pepto-Bismol green area here. I guess Pepto-Bismol is pink, but kind of that sickly green looking thing here, but it is positive right now. We're above 50 with both the RSI 14 and 9. That's positive. And we're seeing an improvement here with the bullish percent index. We're above 50 and advancing. That's positive. We're back above 50 and going up with the NYSE bullish percent index. And we flattened out, but we're above 50 with the NASDAQ 100 bullish percent index. But this is still positive. And we're above 50, but flat right now with the money flow index. We're just about coming up to an extreme reading here with the ultimate oscillator, but it's still positive. We're above the moving average with unbalanced volume, and we're starting to turn up. With our stocks in the S&P above their 20-period moving averages, above 50 and advancing, that's showing good solid momentum in the short term. And we're crossing above 70 here with the study that we use. That's just showing that there's good velocity behind the movement so far. And we're still looking positive with those stocks above their 50-day moving average, going up with the 100 as well as the 200, even though it was kind of flat. Overall, this is showing some improvement. And we're waiting to see if the other part of this is going to be triggered. 2 out of the 3 triggers have already happened with the mass index. When we went above the red dash line and the blue line, that was 1 and 2. When we come back down below the red dash line again, this is suggesting a reversal. So we'll just have to see what the market's doing at that time. And we are still above this little mini rainbow with our other 20-period moving average study. So this really didn't provide overhead resistance. It did for a couple of days, but now we've been able to break above it. The longer we can stay above it, the more these lines will turn and go back up. Ichimoku still looking better, and we're coming up out of the cloud, but we still have the red line above the blue line. Now, the blue line's starting to kick into gear here, and if we see some more positive action, it could cross back above the red line, where the green line is much harder to see. It's looking more positive. And we're still above the 50% fib extension level here with the SPY, as we see a good bounce out of that real decline. This is a weekly chart, and this is positive longer term. We were able to get above and close above this R2 level. So we came all the way down to this R1 level that acted as support, and we've been bouncing up since then and showing a real improvement, but not setting an all-time high yet. And we're looking good with our different trends here. The Heiken Ashi with the open candles, that's positive. The Kagi is black and pointing up, that's positive. The Renko chart has open blocks, that's positive. And the 3-line break has open candles here. That's positive. And we had just enough of an upward move here to get a new X drawn in after generating a low pole reversal with the point and figure chart. So trending, we're looking pretty good now. We're looking good with our 150 and not necessarily extreme, where we have been breaking above this red line with the 200-period moving average steady. But again, you could also see this as good long-term momentum. The rate of change going back 200 periods, it is coming down a little bit, but we're still above this blue line. This is a little shorter look. If you look at this in a bigger picture, which I probably should have included that chart, we're not necessarily extreme. I'm just trying to relate it to what has happened over the last couple of years. We're positive across the board with the Keller market model on all time frames across all indexes. And we're still negative across all time frames with commodities and the dollar across all the different time frames here as well. And not much happened. Thursday was such a big day that, in fact, the only negative thing that happened was Canada closed down below 23,000. But we saw the materials have a bullish MACD crossover, and then the NASDAQ was able to get above 17.6. And someone finally looked at this and go, oh, maybe we should update this. We're positive across the board with the decision point scorecard, both on the trend models and on the PMO signals. And we saw most of the sectors up, with financial leading the way higher. Utilities had a pretty good day. The areas that were down, real estate, it doesn't really like this. And it's not sure about this whole interest rate thing for right now. And the weaker housing starts and building permits put some pressure in real estate. Energy was down, industrials were down as well. And we're looking better here with the new highs minus the new lows. This is just a daily raw score, and we're above zero. The red line in here is a 50-period moving average of that daily score. Looking good here. The red line is still above the S&P 500 weighted index. That just means the rest of the S&P is holding up well right now. And we continue to, we're down a little bit here when we do a ratio between the S&P and the equal weight S&P, but overall this has been coming back up. And the Dow was able to get above and close above this pivot point, is above its 50-day moving average, but not back to an all-time high, at least yet. We are positive with the Elder's Impulse system for the diamonds, and this is what I was watching, especially for the NASDAQ 100. But we were able to get above and close above the 50-day moving average here with the NASDAQ. And we're also able to close above, but we're right at this pivot point now with the NASDAQ 100. Is this going to provide some overhead resistance? But the fact that we're above the 50-day moving average is positive in and of itself. We're positive with the Elder's Impulse system for the Qs. And when we look at the Qs, we're above the 50-period moving average here. If we can keep going up, eventually we'll see this blue line turn and cross back above the red line, similar to what we saw happen back through April and May earlier this year. And the momentum is positive, but not full-blown positive for the NASDAQ 100. We're turning back up above the moving average, but we haven't crossed back above zero yet. And we're getting back above the 23.6 fib extension level here after really seeing some weakness with the Qs. And still, we're kind of range bound here when we look at the small caps, but they were up 0.25%. They're above their 50-day moving average. And they are positive with the Elder's Impulse system for the small caps. We're crossing back above 50 when we look at the Russell 2000 small caps here with the RSI. We're above the 50-day moving average based on price. We're turning back up and trying to turn positive with momentum. And when we look at small caps to tech ratio, this actually went up just a little bit, but overall it has been coming down. If this continues to go down, that means the tech sector is outperforming small caps. And with the mid caps, didn't really hit any new territory here. It was barely unchanged on the day, but they continue to be positive with the Elder's Impulse system. And we were able to get above and stay above the 50-day moving average with the Wilshire 5000, a broad market measure. And then this is the biggest ETF that I can find anyway. We're above the 50-day moving average here. So we're more established in that uptrend, even on a broad market basis. And here's the staples to tech ratio, where we are coming down just a little bit here. We want this to continue to decline if we want tech to outperform staples. Didn't I show that? Anyway, the home builders, this not a study that I show very often. I'll also be going over this in the intermarket analysis video, but we're seeing a divergence. Now, we're not sure if this is a positive or negative divergence, or the S&P has been going up. The home builders ETF has been going up, but not as much as the S&P. So looking at the correlation between the two, that's being picked up right now, and we're getting a very low reading. Sometimes this can be negative. This just means the S&P is outperforming, and to get everything back into gear, we might need to see the S&P decline. This could also be positive in that the home builders are lagging right now, and if the S&P continues to go up, this could help the home builders ETF start to go up, and that would be more of a positive divergence. So we're not quite sure what that means right now. We just want to keep an eye on this. And the financial sector, well above its 50-day moving average and positive. The dollar is declining, but we're still looking at an uptrend, even though that trend is weakening. The FANG index, we closed just a little bit above its 50-day moving average. I was also watching this as possible resistance. It's going to be a lot more positive if we can continue to go above this 50-day moving average. And we're just a little bit above both of these trend lines where we had broken down below them. Well, we recaptured this longer trend line, and now we're above the shorter term trend line, trying to match up those lows. Apple was up 0.59% above its 50-day moving average. We're climbing above the 200-day moving average with Amazon, even though it was down slightly. And we're right in between the 50 and 200-day moving averages with Microsoft, and still above the 200-day moving average with Google, but it was up a little bit over 1%. And we were down 1.84% with Meta, but still well above its 50-day moving average. NVIDIA, which is getting set to come out with earnings here pretty soon, so we might see a little bit of front running ahead of that. It's still above its 50-day moving average. Tesla is also above its 50-day moving average and recently had a golden cross here. Netflix is above its 50-day moving average and also looking rather positive right now. We look at the broad market of the 5-period moving average, highs minus the lows. We're starting to cross back above zero now. So this is showing more continued strength in the broader market. We look at US stocks and compare them with world stocks. The shorter term correlation and longer term correlation are getting stronger. Oil, again, for geopolitical reasons, we're keeping an eye on that. We dropped down into the mid 70s now. And we did decline with the 10-year yield, so we were up with the 10-year based on price. And want to keep an eye on this. Now, you notice we looked at the home builders ETF, and that's diverging. Well, we're starting to look a little bit better here when we compare home construction with 3 to 7 year bonds. So that's why we're not quite sure if that's a positive or negative divergence that we're seeing right now. And then we're showing some improvement here with growth of value, with the Qs to S&P, still below a declining moving average with discretionary to S&P, still above the moving average with large cap growth versus large cap value. So the large caps are looking better, a little above the moving average with the mid caps, and now going sideways with the small caps. And we're starting to go back up slightly here. When we look at the S&P to utilities ratio, we want this to go up for the S&P to outperform. And we want this to go down, meaning that the S&P is outperforming staples, and this is continuing to decline. So what's our outlook for Monday? The technicals were positive, but in the short term, we just want to be aware that we're getting kind of a long list of extreme positive indicators right now. We're going to get the leading economic index or indicator, which will be coming out on Monday. Not a real influential report, but something I still like to pay attention to. And then all the different crazy stuff going on in the world and anything that might happen that isn't even on this list that may have an impact on the markets. And so here's a look at the upcoming week, the economic calendar. Kind of light, really. We're not going to have anything on Tuesday. We're going to get the FOMC meeting minutes on Wednesday at 2 p.m. Eastern. And then probably the biggest one is going to be weekly jobless claims to see if we can stick with that more positive scenario concerning employment. And here's also a look at the upcoming week's economic calendar. Seasonally, for Monday, August 19th, we are positive across the board with the Dow, S&P, and NASDAQ. Now, be aware, we're coming into the week after options expiration now, where we tend to be up, and there's a little bit more of a significance here. We're up 65% of the time, down 35% of the time. And Monday is the most positive day of the week. So we'll see if that can continue, where we might be getting into some weak seasonality here, according to the Stock Traders Almanac chart. We actually see this tapering off a bit during an election year. And also, this is comparing 1968 with now, wondering if we're going to be able to get a bounce like they saw in 1968, which was a very tumultuous time for the U.S., which is kind of similar to what we're seeing now. But when the incumbent president does not run for re-election, we do see a move up throughout August and September. Then we start to show some weakness as September plays out before we see things regain strength later in the year. September is, now we don't know if September is going to be positive or negative, but historically, September has not been very good. We just want to be aware of that, both based on the chart we just looked at, and then this chart just shows that there is weakness in September historically. And this also, going from August to October, you take all three of those months together and they end up having negative returns. But during an election year, things tend to look quite positive in August, but everything looks negative in September. So what are the warning signs? We are still keeping an eye on the staples, utilities, and healthcare. Those are the defensive areas. We want to keep an eye on energy, specifically oil, if things really escalate in the Middle East. Growth of value, it would be nice if it was doing better than it is, but we're not really seeing any real follow-through strength there. The ease of movement is just barely below zero. It could turn positive after Monday if we see any kind of upward close. And then the home builder study. I only have this on the warning slide just because we don't know if this is positive or negative for right now. So we have quite a long list here on the positive side of things. The equity put call ratios, 5 and 10 day, they're going down, which is positive. And then our 3 smart money indicators continue to be positive. The advanced decline lines are doing quite well now. Our S&P and NYSE McClellan oscillators and summation indexes are all positive. The Swenlin trading oscillator, you notice this is yellow. That's kind of in between the primary and secondary. That's looking positive. The parabolic SAR, our oscillators, we're turning positive in the short and intermediate term. We're looking much better in the long term. And then the bullish percent indexes for the S&P, NASDAQ 100, and the NYSE are all positive now. The money flow, the ultimate oscillator, Copic curve, the vortex is positive, and it's gold here because I count that as a primary indicator. The financial sector is positive, and the momentum for the NASDAQ 100 is turning positive. So our conclusion, we're positive when you take everything together. In the short term, we are a little concerned about this list of ours getting rather long. We're turning positive in the intermediate term, and we continue to be positive in the long term. Thank you. I hope you have a really nice weekend, and I will talk to you in the next video.